So being around in the trading industry for almost a decade, what I've realized is a lot of people put too much emphasis on their trading psychology, because a lot of people say, oh, trading is just 90% on your psychology and just a little bit of technicals. I think first is your technical base. You need a proven edge backed by data. Next, you work on your psychology, and then you see, okay, what exactly am I going to do to improve my psychology? So that's a whole world in itself. But a third thing that I think people don't even consider, that I think is just as important as the first two, is having a strategy and having a technical edge that is going to help your psychology. One of the big problems people have is chasing large percentage gain. And a good friend of mine, Kyle, also goes by the name of JadeCap, famously said, you don't need more risk, you don't need more percentage gain, you just need more capital. And the reality is, if you had $5 million in funding, you would only need 1 or 2% per month, and you'd have more profit than you'd know what to do with. If I have one perfect setup and I just use my one perfect setup, I don't trade all of these counter trend, hedge, pro trend swing, pro trend intraday. Instead of trying to do all of that in your first 2 or 3 years of trading, how about you bring things back down to basics and you have one simple, reliable setup that you know is profitable, that is almost mechanical. You have a list of confluences and a confluence hierarchy, and that trade plays out a few times a month. So before I give you a potential trade model and a trade setup that we can look at, let's talk about exactly what we are looking for in a trade setup to make our psychology easier. So if we are to first look at trade issues, if you're a trader, what exactly is it in your trading that causes psychology problems? So first of all, there's external factors. There's, okay, I'm in financial despair. I don't have an income. I need to make trading work. Well, you're going to set yourself up from a place of desperation. It's going to be really hard. So that's an external environment. Another factor is you just don't have time. You work 2 jobs, you have kids, and you only have a few hours a day spare. That is going to make your trading harder because of an external factor. You only have a limited window to trade. Maybe you have to leave limits and you can't monitor price action. That will be a disadvantage. So forgetting the external factors, because that's individualistic and that's something you have to work on. But there's also certain things within your trade models that will bring up issues that are avoidable. That is your choice if you have them or not. Number one is trade duration. If you're sitting in a trade and for it to hit your final take profit, it takes days or weeks to hit, even if it has a good win rate, even if it has a good risk reward, even though there's a proven profitability, it's not going to be easy on your mind. How about you take a trade and it goes 50% in your direction? It's going well. You have profit. You're 3 or 4% up in profit. And then you get a deep retracement, which is normal in price action, just following normal market structure. You might have a 70% retracement. Can you see yourself being up 3% and then coming back down to almost break even and then holding that trade to go to full profit? And that process takes weeks to happen. It's not easy. It requires a strong mind, someone that is not impulsive and in complete belief of their strategy and control of their mind. That is not the most easiest thing to do. I think to optimize your trading, if your trade duration is just a couple of hours, then it doesn't rely on such strong psychological control, because you know that in the space of 1 hour, it'll go from your entry to take profit, and it doesn't leave you thinking and hoping and overthinking and over analyzing and seeing there might be a reversal. Oh, maybe it's not going to hit my take profit. No, it's very simple. And in fact, you can just take your entry, wait for break even, and then leave your phone and check back in a couple of hours, and it's probably hit your take profit or it's hit your break even. And that would make your trading a lot easier. Number 2 is volatility. Ideally, we're going to trade a currency pair that is decently volatile. It doesn't need to be explosive like crypto. It just needs to have good volume. It has to have good movement so that you can capitalize on a decent risk reward move. Secondarily, you should be taking trade setups that are going to maximize for volatility. So for example, if you're taking a position during an Asia session, it's more likely you're going to have consolidation, and therefore you're not going to have big, meaningful moves. And that's going to be harder because then you have to sit through these consolidative periods or places of price action where nothing is happening, and that's where your thoughts will creep in. However, if you are trading during a London session and a London session on a major currency pair, you know that there's going to be a lot more movement. It's not just about time of day. What you also need to add in, where is the most meaningful move going to happen? If you're trading after the main inducement of the day, that's going to align with more volatility, more meaningful moves, because you've grabbed liquidity. That's the fuel of the market that will fuel you to your next liquidity pool or next structural point. Trading with the right volatility makes a huge difference, because then you know that it's basically going to go from your entry to your take profit in one single move without having to consolidate and reverse. Another factor would be trading with the trend. You know that with the trend, you have longevity in a position where, for example, if you're hedging, you know that you're taking a counter trend position. That retracement that you trade, so you have the main push and then a retracement. A retracement can be 20%, 30%, 80%. We don't know how deep a retracement can be. We can speculate. Maybe it's going to go to a supply zone at the extreme at a 70% retracement, but we don't know. So because there is that element of uncertainty and there is not real longevity in the position from a perspective of market structure, it's more favorable to take a position that is pro-trend, because we know that the more likely situation is going to make a new lower low or make a new higher high. And therefore we can say at a minimum, we know that we can get this size of a move, and anything beyond that is a bonus. And therefore the reason that makes it easier on your psychology is because you just know what is more likely to happen and you align your take profits with that, and it doesn't does not require too much emotionality or emotional control or psychological regulation. Next is understanding liquidity pools, because that is going to be the temperament of the market. The market is basically going from liquidity pool to liquidity pool. And that can be either previous structure points, previous day high, or Asia high, or London high. There's plenty of liquidity points, but there's also inefficiencies in the market that price needs to go and rebalance. So when you're looking at the market from structure, liquidity pools, and inefficiencies, you'll start to realize that there's almost like a roadmap that you can follow. And the market is simply going to go from pools of liquidity where there is pending stop losses, where there might be resting orders, and it's going to go to rebalance price. It's going to go to fill these inefficiencies. So when we can kind of see all of these zones and have a trajectory, it is ideal and is going to have more ease in your psychology if you're trading in alignment with those liquidity pools, knowing that your take profit areas or where you're aiming price to go is not just structure, but it's actually going towards liquidity pools and it's going towards inefficiencies that price can fill, and also in line with trend. Now, this is a basic premise I'm going to give. Obviously, there's a lot more things we can add to really improve our trading models to help our psychology, but let's start on a base with this. So let's draw now our parallels. So if we can optimize our trade duration to be between 15 minutes and the end of the day. So basically max trade duration is 1 day, but ideally just a London session. And my trading, for example, is optimized for London Open. So it's happened many times where I take a trade on London Open and within 1 hour, 30 minutes, it's hit my final target, which is a liquidity pool that I'll be aiming for. As opposed to swing trading, you will hold a trade for weeks, which obviously has all the issues we mentioned previously. Volatility. Second, if we can find the inducement of the day, the most meaningful move of the day, we know that when price action of the day happens, you might have an impulse, consolidation, reaccumulation, continuation, distribution, all of these market phases. But we want to optimize for that main push, that main move that will happen. And that's usually aligned with time-based manipulation. So an inducement that happens at a meaningful point and at a meaningful time, that will make our trading a lot easier because it'll be very volatile. Next, obviously, pro-trend position, so that we need to know market structure, reads, we need to optimize for that. And last one is understanding all of the liquidity pools, and then basically finding a liquidity pool that we are manipulating into for our entry, and then having liquidity pools or inefficiencies that will rebalance as targets. So once we have considered all of these things, now let's build a very simple model, a very simple setup that will optimize for these situations so that we can remove basically 80% of the psychology issues you may face, not because we controlled our mind or worked on our childhood traumas, rather we built a strategy that optimizes for better trading psychology. So what I'm going to do is draw out a very simple model type. It's one of my prime setups. I trade Euro USD and GBP USD. So on those two pairs, the trade frequency is a few times a month. So it's not the most often trade that will happen because it has a lot of criteria, but it for sure has a very high win rate and it has a good risk to reward, and it's also using all of those points that I previously mentioned that optimizes for your trade psychology. So number one, as we mentioned, we need to be trading with pro trend. So let's draw out basic market structure. We have lower highs and lower lows, and let's draw out a supply zone. So first is a higher time frame supply zone. Let's talk about H1. Then we have price action, intra-session, arriving to our supply zone. How do I like to see that happening? I like to see build up, inducement, build up, inducement, build up, inducement. That's showing me who's in control. So as I'm seeing this retracement happening, this complex pullback into our supply zone, this is M5, M15 bullish to arrive to our H1 supply zone to then continue bearish on a higher time frame. So then when price arrives to my supply zone, what I want to see, and I zoom in, I want to see price consolidating, something like this. This consolidation, I want to be happening in my Asia range. So if I'm seeing consolidation in the Asia range, which is very common, this is now starting to build the first liquidity pool because I know that there's stop losses above that resistance, above that double top. And also I can identify areas of inefficiency coming back to that demand and probably some imbalances that price can go back to. And then I also have all of these liquidity pools I can target and new structural low. So it's alignment with liquidity. That's the first thing that I mentioned. And now I need to see as price opens for the next day. Let's say I see a Frankfurt open grabs that liquidity, shoots up. Now we enter our London window. London window, what does it do? It grabbed all of that liquidity. Then it gave a false reaction, took those traders out, early sellers, smart money traders and so forth. And then you find an entry model. Entry models, there can be various types, but let's for now stick with an internal break of structure on the M1 timeframe. You find an internal break of structure on the M1 timeframe using a 3 to 5 pip stop loss is very easy and achievable, using an order block and an imbalance or an inefficiency, using the M1 to M5 timeframe on something like Euro USD, 3 to 5 pips is very, very achievable. And that can lead to a very strong risk reward profile just by targeting Asia low liquidity or just by targeting the next demand area. But we know that pro trend would mean we go to target a lower low. So I don't necessarily want to be holding for that full target because of the first point that I made, which is trade duration. I don't want to be holding a trade for days or weeks at a time. I want to optimize for the session. So I know that if I've taken Asia high liquidity early seller's liquidity, found an entry model, and I take a sell based on that to just target Asia low liquidity and next structural demand, which is not likely to hold. I know that New York session can kind of give a reversal or a retracement and then continue lower. I don't want to hold for that retracement. I want to optimize just for the intra-session volatility. So I want to play what is the strong move that is going to happen during my London session. I have identified targets. So now when I come into my checklist, trade duration, I've optimized it for my London session. Volatility, if I find the inducement of the day and I target my London session push. Pro trend position I have found, but that doesn't necessarily mean I hold it. I just know it's in the right direction. And lastly, liquidity I've identified and built a roadmap for. So now I know that if I take that trade based in this area, I know I can get an entry based on my lower time frame and I trade it to first partial Asia low. Maybe we get a small retracement and then next target is our most relevant and closest demand area, which we can see a retracement from during our New York session, for example. That doesn't mean this will be the main move and will continue higher, but we know we could potentially get a move from there. So that's where I'll look to take my final profit. This profile will be optimized for our London session. It can happen within a few hours to reach our first liquidity pools. And that position can lead to an approximately 1 to 5 to 1 to 10 risk reward, which is a very strong trade to be taking. And then we just leave small volume, maybe at 10% of our position size to hold it for our swing. Just in case that position does go on, we leave a bit of volume on the table to capitalize on the swing position, but we are not holding with our emotions because it's a smaller volume size and we grabbed most of our position size and profits at the 1 to 10 risk reward. And then we go on to our next trade and lock away that position and ignore it and go on to the next day. So there's something like this. We can expect price action to do this, for example, and eventually go and make that lower low. But we're avoiding these retracements and periods of consolidation because we maximized for this area. And I think doing something like that with a model like this that has manipulations, inducements of the day, maximum volatility and pro trend with a roadmap of liquidity will not only give you high probable, high confluence and high risk reward setups that are pro trend, it also give you a lot of ease on your mind and psychology because you're not facing the issues that you would ordinarily face with doing a higher time frame swing that could be counter trend on a H1 but pro trend on a monthly. These kind of tradings lead to a lot of issues. Even though they are completely valid and potentially profitable methods, they require a strong psychology, which is not easy. So instead, why not build a situation with the power of one setup that you can attack all of the major issues you'll have in your psychology and optimize it not with your mind, but instead with your technicals and your setup. So do let me know what you think of a setup like this and a protocol like this. Test it out, try it out, and let me know in the comments if it's something that made sense and it's something that will be useful to you. And as always, ladies and gentlemen, thank you very much, and I'll catch you in the next one.